Let's be honest, starting a small business isn't easy. So I understand where the hesitation comes from. I mean, a lot of people think to themselves, whoa, I don't want to go into more debt to start a business. Plus, it's very risky. 8 out of 10 small businesses fail, right? Well, here's the thing. How to start a business in 2020 is easier than it's ever been before. You see, back in the day, you would have to go out and get a loan so you can get retail space or office space just to set up your foundation. So you needed thousands and thousands of dollars just to get started, and you need to hope and pray that someone actually buys your products and your services. Well, today you can start a business without nearly as much capital. And as the co-founder of 2 companies and someone who's helped a lot of people get started, I'm excited to share with you exactly what we learned about how to start a business in 2020. Hey, I'm Sean with Life Accounting, the accounting company that saves you from bad financial decisions and low profitability. Now, there are so many things to think about when you're starting a business. So today we're gonna make it super easy for you and break down what you need to think about step by step. But before I dive in, make sure you like this video and you subscribe to learn more about business and financial growth. Also, you don't have to follow this exact order, but if you do, then it'll make it much easier when you connect all the dots. All right, let's go ahead and get into it with step number 1. Build your business plan. Now, this step is so obvious, so plain, so apparent, okay, Sean, we get it. I mean, a business plan is like an idea, right? Well, as someone who has personally rushed through this step, I can tell you that it is a mistake to not fully think about your business plan. Now, sure, you won't have it all figured out on day 1, but you should definitely ask yourself some of these questions. What problem does your business solve? And who are the people who have this problem? You want to define your audience. How big is it? What are their goals? What are their challenges? And also think about your competitors. What are their solutions? And how are they solving the problem? What makes you different? And also, how can you sustain this difference if you need to replace yourself? And also, will you need a team? Will you need a partner? What will be your initial costs? These are just some of the key questions that you need to ask yourself before you even decide to start a business. Think of it like this. You might decide that you want to start a boutique burger restaurant. You may get so excited that you find your location, you put together your digital menu, you hire some staff, and you get ready for business. Only to find out later that there are 8 other burger restaurants with bigger menus, more quality, and lower cost. And because you skipped the business plan step, you're on a fast track to business failure before you even get started. So plan, and when you're done planning, plan some more. Let's move on to step number 2. Choose your business entity. Ladies and gentlemen, boys and girls, it's time for entity wars. Let's get ready to choose. Now, there are 5 types of entities that you can look at when you're ready to make it official. So we're gonna look at some of the pros and the cons of each one, starting with sole proprietorship. Now, sole proprietors is someone who owns an unincorporated business for themselves, which basically means that you begin working at any time for yourself. The pro here is that you can get started without filing any forms which require annual fees. Another pro is that you are in complete control. You keep all the profits and losses for yourself. The con of sole proprietors is that your financials and your legal situations are tied together. This means that you are personally liable for your company's actions. So if someone has a bad experience with your company and they sue you, then they can go after your personal assets, which obviously could affect you and your family. So I would only recommend a sole proprietorship if... Okay, I don't recommend a sole proprietorship. Let's move on to the next business entity, which is a general partnership. If you want to go into business with someone else and you want the same ease of maintenance and freedom that a sole proprietorship gives you, then you may want to consider a general partnership. Now, the pros and cons of a general partnership are similar to those of a sole proprietorship, except you share the control, taxes, lawsuits, profits, and losses with a partner or partners. So needless to say, I'm not a big fan of general partnerships either because you don't have liability protection. Now the third entity to choose from is a C corporation, which sounds so prestigious, right? Well, let's look at the pros and the cons. The major pro of a C corporation is that they are legal entities that shield stakeholders from personal liabilities and company debt. So if someone sues the company, then the only thing that person can go after are the corporation's assets. Another pro of a C corporation is that they can take special deductions such as fringe benefits. Now the con of C corporations are the strict guidelines on operations. Oftentimes you have to hold broad meetings, record minutes, and meet trading requirements. So for most small businesses, you will spend more time managing the corporation than actually growing the business. Plus another con is that you will experience double taxation, which basically means the corporation will be taxed and the shareholders will be taxed on any income that the company generates. Now this is an oversimplification of how C corporations works, but in short, they're more complex and it can be a huge opportunity cost if you use them. The fourth business entity to choose from is an S corporation. Now at first glance, the S corporation and C corporation are very similar, except the S corporation is limited to 100 shareholders. However, the major pro of S corporations is that you avoid double taxation because the tax liability is passed down directly to the shareholders instead of the corporation. And you still get liability protections that C corporations offer. Now the con of S corps is that you still must have articles of incorporation and you must record corporate minutes. Like C corps, the entity can be pretty complex and generally requires the help of an accountant. For example, an S corp requires that all shareholders within the company take a reasonable salary even if the company is not making a profit. Now let's cover a fifth and last entity on my list, which is the LLC. LLC stands for Limited Liability Company. To me, it's like the combination of a sole proprietorship, partnership, C corporation, S corporation, all bulked into one good flexible option. The major pro of an LLC is that it offers more control and flexibility while also providing that liability protection. Also, you can choose your tax structure from any of the entities that we already covered. Now, the major con of an LLC is that you are required to pay an annual fee, and this structure makes it really hard for investors to contribute capital, whereas an S corp or a C corp makes it very easy. So in my opinion, out of all of these entities, the clear winner here is the LLC. But hey, maybe you have a different opinion. Comment below which structure you think is best. Let's move on to step number 3. Register your business. Registering your business may differ between states, but oftentimes you will still want to file with your Secretary of State office. If you have partners, it's important to create an operation agreement between you and the other stakeholders. This agreement will be used to decide voting rights or control, ownership percentage, successorship, and more. Many states will ask you for your operations agreement when you're registering your business. Once you're registered, then it's time to move on to step number 4. Get your EIN. EIN stands for Employer Identification Number. This is a simple step in the process where you need to make sure you fill out a brief application so you can get a unique number for your business. Your EIN works like a social security number, but for your business. You will often need it when you're paying employees, applying for licenses or permits, filing your taxes, and paying your team. You will also need it for step number 5, set up your business bank account. The cardinal sin when operating your business is to mix your personal finances with your business finances, because it can easily blur the lines between your business profit and losses and your tax situation. Okay, let's see, 23 sales, product costs, shipping costs, make a D, Tesla, freeze, IRS. Okay, so maybe the IRS won't show up at your door, but you still want to make sure that you're relying on accurate information so you can make strong business decisions. All right, let's move on to step number 6, set up your accounting. Once you have your business bank account, you want to make sure you're tracking all your transactions with something like QuickBooks and then hire an accountant to help assist you with your bookkeeping, your taxes, and monitoring your finances closely. This way you can concentrate on growing your business instead of more reporting. All right, let's keep going with step number 7. Get business insurance. I know, insurance can be boring and sometimes feel like a waste of money. Earlier, we talked about business entities and protecting your personal assets. But if you're serious about the success of your business, then make sure your business assets are protected as well. Step number 8, protect your intellectual property. If you have something that is extremely unique and you spent a lot of time creating it, then you should protect it. That means opting in for trademarks, patents, copyrights, and so on. But it needs to be extremely unique and important. Listen, whether you have a protection in place or not, people will try to copy your success. So remember, there's an opportunity cost to everything that you do. You wanna make sure you're focused on your growth rather than protecting your trademarks against nobody, especially because your legal costs can get very expensive and time consuming. And unfortunately, sometimes these copycatters will win their legal arguments with a small and simple modification. So make sure you stay focused. And unfortunately, sometimes these copycatters will win their legal arguments by making small and simple modifications. All right, let's move on to step number 9. Start marketing and advertising. Now, when you got all your business stuff set up and you're ready to go to market with your products and your services, then you're ready to start marketing and advertising your business. If you're just starting out, then you can check out my video on how to calculate your marketing budget. But the key takeaway is to make sure you're putting away at least a year's worth of expenses that will be spent on your advertising. Which leads us to our last step, step number 10. Be patient and prudent. Remember what I said at the beginning. Starting a business isn't easy, but in 2020, it's easier than it's ever been before. And in 2021, it's probably gonna get even easier. You can do a lot of the things that we talked about by simply whipping out your laptop and hanging out on the couch. The most important key to your future success, in my opinion, is to be patient and prudent. Because if you follow the steps outlined above, there's no reason to give up after a few months. And if you're being prudent about your expenses and your financials, then you will be able to build a long-lasting company. So in conclusion, follow these 10 steps. Number 1, create a business plan. Number 2, choose a business entity. Number 3, register your business. Number 4, get your EIN. Number 5, set up your business bank account. Number 6, set up your accounting. Number 7, get your business insurance. Number 8, protect your intellectual property, but that's optional. Number 9, start marketing and advertising. And number 10, be patient and prudent. Well, that's it for this video, guys. If you enjoyed it, tell us in the comment section below. And as always, thank you for watching, and I'll see you in the next video.